All right, going, guys. Jeff here, back again with another video. So today, we'll be talking a little bit about the whole Russia-Ukraine situation, and of course, with the whole global market, how it's actually affecting the entire market. Of course, if you want to, you can just minimize this entire thing, keep it as like a podcast kind of thing. You can listen it in the background. Okay, but anyway, yeah, because I won't be showing you guys any additional details on the screen anyway. So, all right, so right now, if you're watching this video and you're invested in the market, there is a very, very good chance that you are down on your portfolio. Okay, for people who are into tech, you are probably down 40, 50, even 60%. For people who are into cyclicals, you're probably down 20, 30%. For people who are into commodities, depending on what kind of commodity, chances are you are probably up a little bit. Okay, because be it if you're in the gold commodity, you're in silver, you are in wheat, you are in aluminum, you are in what's that like palladium? I forgot what's the material that you actually use in your graphics card. Yeah, those are the commodities that are actually going up in price. So chances are, if you are in commodities, those are the portfolio that you should be up on. But chances are, I can tell you that a lot of people who are actually invested in the market do not really like to do not like to buy into commodities, because when you invest into commodities, chances are the level of growth for the commodities is not very, very high. And it's not exactly a very, very attractive sort of investment for you to really get into. But of course, in this time of war, military action, invasion, whatever you want to call this, it kind of makes sense for you to actually get into commodities. And right now, I would imagine that a lot of people will like to really go towards a diversification towards commodities as well in your current portfolio and such. But of course, today I just want to talk a little bit more about portfolio wise. What am I doing? What I think I should be doing a little bit better. So for people who do not know, I have been doing an option strategy for me to actually get premium by writing out contracts every single 2 to 4 weeks or so. If you have not seen that video, just type into the YouTube search bar, just type in Ong Hauser option strategy. It should be on the first result. But yeah, in that video, I basically explained to you guys what is the option strategy that I'm actually using for me to actually farm the yield from all this sideways trading market. And of course, at the same time, as I am really farming this yield by the side, at the same time, on the other side, I'm still getting destroyed. Okay, my long positions are getting destroyed, and it kind of bring me to a different revelation, because at the same time, I'm actually into a lot of stock picking. And one thing about stock picking is that you really need to have a high paying job to really uh, support this level of stock picking. So I'll explain a little bit more about why you actually need a high paying job to really do a lot of stock picking. Because for stock picking, chances are you are really open to a lot of risk, which is why I can assure you that you probably already seen countless video of people telling you to just invest into index funds, ETFs, and such. Those are, of course, the stocks that you should most likely be buying if you are really in it. To close your eyes and just buy into it continuously. Those are definitely the kind of stocks that you really want to get into. Unlike stock picking, when you actually really look into a certain company and see, like, okay, I want this company because this company is good in the long run. Of course, those are also the one that will really get you the most return if you actually hit it big. For example, for people who actually got into Tesla at the start. But right now, I'm really starting to side towards going to the index funds and such. But of course, right now, I'm still recalibrating my entire portfolio and such. Right now, I can tell you honestly, my portfolio has been quite decimated, to be honest. To be frank with you guys, my portfolio has been decimated for the past 2 to 3 months or so, especially during the whole December, January, and February situation. completely destroyed. Okay, and let's not forget, okay, there are still a lot of problems that is still in the current market that we have not exactly struck off yet. So first of all, the Russian-Ukraine situation, let's not forget, because we do have the whole nuclear plant exploding and such. Of course, the Wall Street Journal actually came out to report that there are no radiation leaks that were reported. So that's very, very good. However, let's not forget that because since there is no radiation leak, NATO also said that they are going to be rejecting to really intervene with this concurrent war, which is why they actually declined a no-fly zone in Ukraine, which Zelensky actually came out to ask for, just so that Russia will not fly in above Ukraine and just throw out a bomb to actually create a form of nuclear warfare in the country. So that's a concern, of course. And the second concern that I do have is the FOMC meeting that will be happening on the 15th of March. So on the 16th of March, when Jerome Powell actually comes out to talk to the press, we do have this sort of fear that Jerome Powell might be adapting what he actually did back in what the Federal Reserve did back in the 2002, 2003, 2004 and such, where they increased interest rates continuously and at a very, very quick rate. So every 7 to 8 weeks, we would see a 25 basis point hike, and it's going to happen every 7 to 8 weeks. That's the concern that we do have. Okay. At the same time, I do think that Jerome Powell most likely wouldn't do this, but I do think that some of the hawkish members would most likely want to kind of deal a finishing blow to the economy, sort of thing, where they just want to pull the rug underneath the entire economy so that we feel the burn, we feel the pain immediately. And immediately afterwards, in the short 2 to 3 months after that rug pull happens, we're going to have this instant recovery and the inflation would just suddenly dip down crazily. And these 2 to 3 months would most likely be what we call a pseudo recession. So this is also my fear, which is my number 2, a pseudo recession. If we do get a pseudo recession, then there is a possibility that all my stocks are going to go down an additional 20% more. Okay, and this is on top of the fact that the war is happening as well. So these are just the fears that I do have in the market at the moment. And of course, I probably would want to stay off the market if I can. But honestly speaking, right now, it's very hard for me to really stay out of the market because similar to those 2 points that I stated as bearish possible catalysts, those 2 bearish catalysts could easily become 2 bullish catalysts. So for example, the first one where I actually talked about how the whole nuclear warfare, Russia-Ukraine situation. So let's put it into perspective. Let's put another scenario. Just put this new scenario into your head. What if either Putin or Zelensky die in the next week? This war would effectively end. Okay, I'm not saying if Putin die, I'm not saying that Putin will die, or I'm not saying Zelensky will die, but if either of these leaders pass away in the next week, this war will end. And I'm not saying that this is a good thing either, okay? Because if Zelensky die, Russia will basically effectively take about, say, 3 days for them to actually get into the government, maybe another week or 2 for them to do a puppet government and basically bring Ukraine under a more Russian-backed government, and then they can kind of form back their Soviet Union again. That's the first scenario, okay? The second scenario is where Putin dies. So if Putin dies, there is a good chance that no one's going to be running Russian military anymore. A lot of the military personnel are going to just be like, yeah, Putin's dead. We are not going to fight this war anymore. Because like a lot of people is actually bringing this up during this war. This is not a Russia's war. This is Putin's war. Putin is the one that wants to enter Ukraine very, very badly. Not Russia. Russia don't care. Okay? So, and when Putin dies, or if Putin dies, this whole thing is just gonna end immediately. So, either way, if either of these figureheads were to die in the next week or so, this whole thing would just poof, gone. And when this is gone, there's no more war tension whatsoever. I can assure you that the market is going to bounce up so much, because right now I feel that there would most likely be about 10 to 20 to even 30% of the people who were invested about 3 to 4 months ago, who just sold out from the market and just said, you know what, we're going to sit this out. And if anything, we might even want to short the market because this is going to continue going down. And because of that, I do feel that the moment that either of the figurehead were to pass away, this kind of just brings so much euphoria into the market, because it basically means that the biggest worry, the biggest concern in our entire portfolio in the market concern is gone. One of the biggest one. Okay, let's be honest here. If you look at any of the mainstream media right now, everywhere is going to be plastered by this Ukraine-Russia situation. Okay, even on my own channel. Okay, look at my past 6 videos or 8 videos. They're all about Russia and Ukraine, because there's so much packed into this. Okay, and there is so much curiosity, so much information in this entire war that it just precedes what we actually know of. And of course, and this is also an ongoing situation, and there's always going to be new news that's going to come out. And because of this huge situation and such, it kind of just creates this ball of concern for a lot of investors. And yeah, which is why, back to my point, if this disappear, then yeah, I do not really see that big of an issue for the market in the near term. All right, so same thing. Now we go back to the second scenario, the second reason why this might be a bullish catalyst. So this will only work and it's not and. Okay, and I'm gonna explain this because this might actually sound a little bit discombobulated for you guys. So for the second reason why this might be a bullish catalyst is if Jerome Powell or the whole entire FOMC basically says that we are going to continue with our rate hikes as we plan, which is 4 rate hikes in 2022, possibly 5 rate hikes or 6 rate hikes in 2023, and also possibly 6 to 7 rate hikes in 2024. For example, this is according to the December dot plot. Okay, they can just basically say that, and the moment they say this, there is just the concern immediately dispersed from all the investors' mind. Okay, so now when I do say that this is an or scenario and not an and scenario, it's because if Russia and Ukraine war suddenly disappear, this FOMC is not going to have this it's not going to have this kind of dovish sentiment, because if this disappear, the Federal Reserve will put in every ounce of effort that they have to get rid of inflation. And in order for them to get rid of inflation, they will have to pound up the rates. Okay, and we're looking at worse than 0304. Okay, I'm looking at like 5 weeks 25, 5 weeks 25, 5 weeks 25, 5 weeks 25, and we're gonna get that so fast that we're gonna reach like 12% by 2023. And then immediately afterwards, we will see inflation rate just tumble down eventually. And I think that is what would happen if we do not have this ongoing Russia and Ukraine situation, which is kind of like I would like to say the silver lining in this entire thing, because right now this war is really putting the concern into the Federal Reserve mind as well, because they do not want to be hawkish during times of war. This is definitely a game changer, according to what Jerome Powell said. Verbatim, a game changer. And because of that, I do think that they are also putting in a lot of thoughts into this. Which is why I said that this is an or scenario, not an and scenario. So either way, when I actually put this into my calculation and such, I do think that it's better for you to be bearish than you are to be bullish. And for those reasons alone, it simply means that I just won't want to buy in. I'm just not going to be buying in. Okay, if you realize all the weekly trades that I have actually announced to you guys has always been trades where I am either selling a call, I'm buying puts, or I'm buying into a company that is so cheap, that is so oversold in this entire BS that has been happening since August. Those are the companies that I'm actually buying into, like Palantir. Like Palantir right now, okay, today is the start of the day, okay, but Palantir right now is $10.85. I cannot not buy Palantir at this pricing. I just can't. And because of that, I don't think that Palantir is still a good company for me to get into. Okay. As much as this is getting oversold to the point, I do believe in the company as it is. And I do research about the company as well, which is why I do want to invest in the company. And that's also one of the reasons why I said I either sell calls, I buy puts, or I buy into companies that does not matter to me in the short term. I don't care about price action in the short term. And this makes sense. Okay, Palantir makes sense to me at $10.85. I'm basically just buying the dip. And of course, at the same time, I can tell you guys that this is not really the good season for people to really buy the dip, because you can actually just look at investors' appetite for risk, especially during this period of time. You can see how much investors actually buying into, especially for retail investors. Retail investing has really went down in terms of how much are they actually aggressively investing as compared to what we had in the early of last year in 2021, where there was a lot of aggression for trading. Be it you are longing the market or you're shorting the market, there was constantly a lot of trading pressure going on in the market. As compared to right now, it's mostly institutional and also the AI generated bots who are doing the trading. Retail investors don't really want to be in this market at the moment, and I can totally understand why. Because retail investors right now, you don't really want to sell, and those people who want to sell has already sold out. They are just waiting to time their market, their entry back into the market. And for people who do not want to sell, are basically just holding on to it, and they are not constantly buying the dip either. They probably bought the dip, and then the dip continues. Because let's be honest, from the August period of 2021 all the way till now, you have been quite a constant decrease. Okay, we even thought that around November and December we will see a huge increase in prices. That didn't really happen either. Prices just kept on going down. So that's kind of concern that we have in the market. But I'm just telling you guys, okay, like this, be it if this war ends or not, it will not hold that big of damn it, I missed out on my buyback in sort of opportunity, because I don't think that this war would really put that much pressure on the US market as such, simply because inflation is still a thing. There's always a bigger concern. And because inflation has been one of the biggest concern that we do have all the way since November, when we actually started to see 6% inflation year over year. And then with this sudden war happening, this just suddenly took over the first place instead of inflation, pushing inflation as the second thing for us to worry about. So in hindsight, let's just take it as, this war just disappeared. We still have this inflation, this persisting inflation. And let's not forget, this inflation do affect a lot of other things. Okay, it's not just prices; it's also supply chain situation and also wage price spiraling. Okay, the higher the prices of things that consumer buy, the more companies would have to increase wages of their employees, and the more the whole entire thing would just spiral down. And that's just my concern for the market right now. But yeah, anyway, kind of a short video, surprisingly. I mean, less than 20 minutes, but thank you guys for watching. And I'll see you guys on Monday.